Hello and welcome to Dialogue. I'm Yang Ray. Internet finance, also known as e-finance, refers to loans, investments, and other financial services provided through online channels rather than through banks and other financial institutions, promoted by information technology and the rapid growth of e-commerce. Internet finance has emerged in an explosive development in China, with more and more innovative business models enlarging its market size, while at the same time getting better known in every household and in global e-financial sectors. As the internet penetrates the financial field, how is it changing the traditional financial model? As China mulls over new policies, what's the outlook for internet finance in China in the future? And how should the government facilitate the sound development of the internet finance industry to best serve Chinese economic development, or what we call the real economy, under the so-called new normal? To answer these questions and more, I'm very happy to be joined here by Mr. Gregory Jib, who is the chairman of Shanghai Lujiazui International Financial Asset Exchange Corporation Limited. But before we start the interview, let's look at this.
Internet financing has been riding the wave of China's rapidly growing internet industry since 2013. Before that, finance was thought of as the exclusive domain of traditional institutions. China's internet giants have changed the game. The BAT, Baidu, Alibaba and Tencent have seen exponential growth in their mobile payment services. Digital financing has also significantly impacted on traditional banks. Mega banks with complete service portfolios have been improving their efficiency and awareness of their internet services.
In our Retail Banking 2020 report, we've outlined a number of different business models, and one of these is the ecosystem bank. And we think that traditional banks will be able to make plays in this area, and there will probably be partnerships with the existing fintech players.
But besides those industry heavyweights, the bulk of the internet financing sector is facing some difficulties. P2P lending via platforms that connect microloans and borrowers boomed quickly at its beginning. But during the first quarter of the year, 260 P2P lending companies fell apart. Nearly 4,000 P2P lending companies with over 1.7 trillion yuan in assets from investors still survive, however. So the industry is still huge. Experts say that the business model is simply not sustainable. At the moment, the P2P average annual returns are still relatively high, but have dropped from 20% to 12%.
They have built unrealistic expectations in terms of returns that they can provide to the individual investors. That's probably driven from a market point of view, where there's so many of these guys, each one is trying to one-up the other in order to attract funds.
With the industry being weeded out right now, and with companies learning how to better support their growth while investors start to realize the risks of P2P lending, the government is also looking seriously at bringing in more regulation. China established the National Internet Finance Association this March. The State Council is leading a one-year clampdown on P2P lending fraud, and registration for new P2P lending companies is being introduced in cities such as Shanghai and Shenzhen.
Welcome to Dialogue, sir.
Thank you.
These days, the issue of internet finance starts to generate headlines. A lot of startup companies, so many young, ambitious people from the United States or Europe, they are attracted by the appeal of angel funds to have their own Chinese dream, if not American dream. So how influential is internet financing, and how serious is the impact of this internet finance that's to be delivered to the traditional banking industry?
Well, I think that the impact is pretty substantial. We're changing the way that money moves. We're providing new funding channels for SMEs and individuals, providing new investment opportunities for a lot of people across China. And the truth is that the market has grown so quickly here because there are unmet needs. I personally don't believe that a market grows just because you name it as a sexy market. It grows because there are fundamental needs that just haven't been met yet. And yeah, there's a lot of dreams. I mean, it's clear that as we've seen the market evolve over the last year or two, you've seen a lot of fraud. You've seen a lot of problems, you've seen a lot of headlines, people running off. And the truth is that internet finance at the core is still about good financial practice, it's still about good risk management, and a lot of these small companies just didn't have that there. and they didn't have the business models in place, and so we see the problems today. But if we look at two issues here, one is there's a huge market. It's there for the taking for those who do it well, and for those who don't have a business model, then you're going to see this industry change quite dramatically, with a lot of people not making it through the next 12 months.
China is home to some of the world's biggest banks, and since the rising of internet finance, people have been asking whether internet finance entrepreneurs might upend China's banking sector. Now that internet finance is with us, banking is a little holding its own. So what do you think of the relationship between internet finance and traditional banking?
So I think that the line will blur. I think when we're sitting together, maybe in a year or two, we'll no longer talk about internet finance as a separate topic. I think the question is who is able to best digest new technology in their business model, can serve customers in a new and better way, can use data in a new and better way. And so I think what you're going to see happen is there's going to be some startups, and you're going to see some traditional players who use this well, and they will just grow more quickly than the rest of the industry. Equally, you're going to see players that are big today who do not adopt new technology, who do not change their culture to use the internet and data in a new and different way, who, relatively speaking, will see their business grow less quickly. So I think we're at the beginning of a stage in finance where those who adopt technology well are going to change their trajectory over the next 6 or 7 years. And those who don't adopt it are going to see a shrinking market share.
Since our last interview, do you think malpractices and irregularity start to decrease due to the enormous efforts and input by the watchdog?
I think we're really at the beginning. I think the efforts of the regulators have really been coming to roost over the last 3 or 4 months. I think a lot of information...
To be more specific, would you brief us on the specific issues of irregularity, malpractices?
Well, there's the basic concept of internet finance is that you have someone or you have a project that needs funding, and that is a very transparent project. It's put forward, and people who like it can invest in it. That's the basic idea. What's happened, though, in terms of irregularities is two main things. One is that a lot of the funding projects have been intransparent. No one's really known where the money is going. Money's been gathered before there are projects. Right? So the basic principle of here's a project you can invest in has been lost. People have been gathering money online, and in some cases there's been total fraud. There's been nothing to invest in. Or in other cases it hasn't been clear where the money has been invested into the investor. That's one major problem. The other thing is that there's a basic principle in finance, which is if the borrower wants to borrow for 1 year, it's best if the investor gives him money for that 1 year. But what's happened in China with a lot of these small platforms is they've been giving money to borrowers for 1 year, but finding investors to only invest for 1 month. And that only works if there's lots of new investors coming in. And as soon as that flow slows down, then the whole money chain breaks. And so what we've seen happen over the last 12 months is really these two problems. One is there hasn't been clarity around the projects, and secondly, there's been these mismatching of durations of people who are borrowing and investing, which leads to big risks. It's a fundamental business design problem.
Does that mean automatically that we have far less angel funds than the PE? The PE expects the companies they invest would get listed the next day so that they would get a huge reward.
Sure. I mean, the truth is that the industry is going to go through another 6 to 12 months of consolidation. And here I don't mean that the big companies are going to be buying the small companies. I mean a lot of the companies that don't have sustainable business models will be pushed out, will disappear. So there's a lot of money that has gone into the sector, and there'll be a lot of people who are disappointed. I think you'll find that what happens through this process is not dissimilar to what happened in the whole e-commerce business 10 years ago, right? Lots of people pour in, everybody wants to be part of the market, but the truth is there is a big market, but it's only a market for those who can do it well. And you end up with 2, 3, 4, 5, 10 players that make up 50 to 60% of the market, and then a lot of smaller players who don't have the skills just don't survive through the process.
We've been discussing the burgeoning awareness of the supervisory authorities at a different level to make sure that transparency is guaranteed, or poor transparency is minimized. But do we have any laws, any pieces of legislation to guarantee sufficient transparency to avoid, mishandling of the issue?
Well, I think that you face a situation where there is not a clear legal framework. What we have going on now, I think, is the first stage is the regulators are requesting all people who operate to provide information to the regulators. How much volume do you have? What type of business are you in? How do you separate businesses of different types? An insurance business is different than a fund business, which is different than a peer-to-peer lending business. So all this information is being gathered, and I think the guidelines of what is allowed and what is not allowed are being drawn up. Also, there's very clear guidelines about how money should be treated, how banks should be used to ensure safety for investors. And I think once these principles are clear to the entire market, actually it becomes a very easy game. Because as you said in the beginning here, a lot of private equity money has come into this industry. It is an industry that grows quickly. Any industry that grows quickly takes a lot of capital, takes a lot of resource. Private money, private equity money, venture capital money is not going to go to platforms that are seen as being not compliant with the regulators. That's a bad strategy. So what you will see as the regulators have laid out their guidelines, whether they're actually laws or whether they're principles of operation, is that companies that follow those principles will continue to get resource. And those that don't will be pushed out, either lack of funding or because regulators themselves will come and say, you're not compliant and you're out of business.
Are you saying that the Chinese internet finance industry has passed the time of bad money driving out good money? And what do you think of this area where I'm afraid you show consistent and persistent interest? That's the area of P2P lending and the third-party payment platforms.
I think we are in the middle of the game, in the sense of is it good money that is driving more good money to come in, or is it bad money that's driving good money out? I think we have another 3 to 6 months of consolidation process before everyone is clear what are sustainable business models, what are the implications of the regulatory policies, and when that happens you'll start to see stronger growth, I think longer term, stronger sustainable growth coming out of the industry. It's like all these things, you know, when e-commerce was hot, you have this initial boom, then the market kind of flattens and consolidates, it gets reordered, and then you get a foundation which is much stronger to go and really build the industry around. You know, if you remember, I think it was Alibaba took 7 years to profitability, Amazon I think took 10 years to profitability. These are stages where companies are building out new business models to really change the way things work. And I think in China right now with internet finance, we've kind of just gone through the first stage. And we're really, over the next 12 months, going to be going through quite a difficult consolidation phase that will set the foundation then for the next stage of more sustainable growth.
China certainly plays a leading role in e-commerce and e-payment, and we have the giants such as BAT, Baidu, Alibaba, and Tencent. Does it mean at the same time that the small and medium-sized enterprises or startup companies in the IT industry will have a little margin for their maneuvers because of the alleged monopoly by the giants?
I think that what we're going to see happen in the role of internet finance, the BAT will play a role, there's no question. They have enormous customer resources, they have enormous access to data, they have payment infrastructures online, they will be significant players. But finance is a little bit different than e-commerce. It has risk, all kinds of different types of risks in there. It requires a different way of managing your customers. When people go to a site to buy clothes versus if they're going to a site to invest their money or invest their retirement, it's a slightly different way of managing customers. So I don't think that you're going to see necessarily that the BAT advantage they have in e-commerce transfers automatically to fintech. I think what you're going to see in China, very interestingly, is there's going to be a number of startups in the space. I think you'll also find that traditional players, whether it's banks, insurance companies, securities companies, will understand the technology and make it a very important part of their strategy. So I think as we move beyond the shakeout phase that we're in now, is you will see the traditional players also using technology well, playing up against BAT and startups like ourselves to really form new ways of doing business with the better use of technology. It's kind of like asking the question, Tesla makes great electric cars now. 10 years from now, is Tesla going to be the only one making electric cars? For sure not, right? You're going to see a lot of traditional players who can use the technology to conduct business in a different way.
Let's look at the behavior of the Chinese consumers who want to invest, but they don't have much of choice in terms of investment. Let's look at this. Traditionally, Chinese people have preferred to keep their money safe in the bank rather than investing in personal finance products or assets that may result in higher returns, but also carry higher and big risks. But is the convenience and ease of using personal finance apps changing people's habits?
I think it is. I think it's very interesting. In some ways, probably the most conservative market in the world is Japan, because 60% of all the money, or 80% of all the money in Japan sits with people over 60 years of age. That's not a very dynamic group of people, generally speaking. In the US, most of the people who have money are going to be over the age of 40. I think what's interesting in China is that there's a lot of people in their 20s and 30s who are very adaptive to technology, who also have very rapidly rising incomes, and are willing to try new solutions to solve their problems. They're a very mobile crowd, and they're very interested in giving their business to people who can meet their needs well. They're not as attached to a bank as it might be the case in the US or Japan or other developed countries. A lot of times my friends from the US will call me and say, can you remind me again what it is that you do in China? And when I explain to them that we're a new company that serves people and lets them invest in our platform, they're very surprised, because in the United States, if you're 45 years old and you have money, you've been dealing with Citibank or Wells Fargo or a large bank for a long time. You're not really looking for something new. In China, that's different. People are open to new solutions.
Thank you very much. You're watching Dialogue with Mr. Gregory Gibbs, the chairman of Lufax. We're talking about internet finance here in China. We'll be back in a short while. Stay with us, please. Welcome back, sir.
Thank you.
It's very strange, isn't it, that on the one hand, the Chinese economy is slowing down to 6.7%, or the margin would be between 6.5 and 6.7, whatever the margin, we are slowing down, and it's what we call the new normal. On the other hand, given the sizable population of 1.3 or almost 1.3 billion, the creation of jobs would top the agenda of Premier Li Keqiang and indeed that of President Xi Jinping each year without exceptions, because every year we have millions of university graduates and those from vocational schools. How could the Chinese government or governments at different levels possibly solve this very difficult issue for politicians in other countries? And we were able to do that beautifully. Last year, even before October, we were able to provide 12 million jobs. And this year, hopefully we're going to live up to the expectations of creating 10 million jobs. This is absolutely amazing for politicians in other countries. So what do you think of what's happening here in China? Is that because of the rise of internet, digital technology, and our encouraging the massive entrepreneurship and the innovation?
The one thing that I would say is that China has proven itself time and again able to move extremely quickly. It is a place, I've been here now in Shanghai for 5 years, and I always have to update myself almost monthly on what's going on in the market. What I would say is this. I think that I think sometimes of China like a checkerboard that has two dimensions. One is geography and the other is industry. And when you put those together, there's a lot of spaces on that checkerboard which are bright and they're white. And on those spaces, there's a lot of growth. In the service industry, in internet industries, in e-commerce industries. If we can promote the right amount of entrepreneurialism and make sure that funding gets to those spaces, then actually you have very strong growth sectors in China. I'm sure you're very familiar. You're going around Beijing and Tianjin today and Shanghai. You almost never go into a place where you can just sit down at a good restaurant without waiting. There's a huge amount of demand for high quality services. The service industry in tier 1 cities are growing extremely quickly. Yes, if you go to Northeast...
It is in the first tier cities where you see biggest concentration of young university graduates seeking jobs here, right?
Yes, yes. No, I think that for me, the main issue is this. Right now, if we look at the return on equity of state-owned enterprises in China, it's 4%. The average return on equity on privately owned enterprises in China is 12%. That's a 3 times greater level of productivity on capital use. As long as China can continue to put more capital into those enterprises with higher productivity, that will generate a lot more jobs and opportunity for people in China. And that's the key. How can you transform the allocation of resources as quickly as possible?
I'm sorry for raising a big question on a big issue. That's the real economy. Internet finance and the real economy have certain inherent contradictions. But the real economy is the foundation for the survival and development of the social economy, while internet finance can reduce costs, improve efficiency of capital allocation, and have a promoting effect on innovative entrepreneurship in small and medium-sized enterprises development and economic growth. So question is, how should one promote internet finance further to drive the real economy? That will help a lot in creating jobs.
Yeah.
For those particularly with poor skills.
Yeah. No, I think that the key are two things, and this is what the internet should be able to do well. The first is transparency, right? Which is, there are people out there that are running businesses who are individuals who need money. What are their situations, and what is the risk that's inherent in giving them funds to go develop their business? Creating transparency on that, there is actually no shortage of money in China. It's just a matter of how and where it should go. And I think transparency is number one. The internet can help a lot with that. The second thing, which is very important, and it gets mentioned a lot as an economic priority in China, which is lowering the cost of funds for small business owners. The truth is that borrowing costs, even today, for small businesses are high. They're well into the double digits. And the reason for that is, one, because there's low transparency in the system. The second is because there is no ability to trade debt in China, or relatively low liquidity in many markets. And I think that internet finance is a way to create liquidity amongst borrowers and investors. It's a way for people to trade risk across geographies, and that is happening day to day. So I think you will see that over time, the internet finance industry is very directly connected to the real economy. If you're not serving the real economy in the internet, you don't last long. You have to serve real markets to grow and build scale and get access to data that helps you manage risk.
Each year, we have a World Internet Conference in Zhejiang. Surprisingly, 3 decades ago, it's Wenzhou that wowed the whole country and perhaps even the whole world with its own unique and successful experiment with home-based business as a private market. It's in Chinese, 民营企业. It's not far from Wenzhou today, where we saw the flourishing of e-commerce. It's not only because of the formidable presence of Alibaba in Hangzhou, where Ma Yun was born and grew up. It's also perhaps the shadow banking. I'm not sure if I'm politically correct in saying that it's the shadow banking, because you're talking about the borrowing costs, and it's very difficult to get money from state-owned banks or even the cautious lenders, be they the angel or private equity. Is it possible for the startups to have money from the underground banking, and therefore we see the dramatic increase of costs and risks as well?
Well, I think that shadow banking and underground banking around the world has come to define anything that's not done by a bank. So it's a very broad definition. In China, you have the whole trust industry, which is a big form of finance for industry, for real estate, which would fit under that space as well. I would say that the challenge is this. Domestically, banks have tended to focus on mid and large-sized companies. It has been where the branch managers have grown up. The heads of large banks, be it state-owned or otherwise, have generally grown up from a commercial banking background. But what is needed to support the transformation of the Chinese economy is much more money that is given to consumers and is given to small businesses. And that is a different set of skills that takes time to build. And I think what internet finance has an opportunity to do with the use of big data and risk models is to be able to channel money from one part of the country to another part of the country, from one individual to another individual with a high efficiency that is done with transparency. Now, clearly, there's a lot of risk in this. It's not a business or a platform that is easy to run. It's not for everybody to do. And in China today, we have 2,000 platforms trying to do this. I think the realistic number, once we've gone through the readjustment in the industry, is probably you can measure it in the tens or the hundreds. Interestingly enough, if you look at the US today in internet finance, the number of players doesn't get to 100. The same is true in England. We have thousands in China today. So there is an adjustment of how this will happen, but I think you'll find that it's quite an efficient way to get funds to where they're most needed and to the parts of the economy that can grow quickest.
P2P lending with much higher returns than bank deposits is very appealing. There's no doubt about that. The Chinese, ordinary Chinese whose investment channels are limited would definitely find this idea very interesting. But are there any lessons that we can learn from other countries regarding their more developed P2P regulation?
Mm-hmm. Well, I think that the first thing that we need to learn, and I would look here to the UK before I would look to the US, is the UK has relatively early on really forced the industry to self-regulate. It has brought regulators together with key players of the industry and said this is a new space. It's not exactly like old banking. It has a different set of requirements in terms of who the participants are, what the risks are, what the technology means for how processing gets done. So how do we build regulations around that? And the truth is technology changes a lot every 2 to 3 years. And regulations you develop today, given another 2 years, the evolution of the market is going to be very fast. We may see new risks popping up. You need to re-regulate the way, or change the way things get regulated. So I think the UK has built up a very good dynamic environment for industry and regulation to come together and say, how do we deal with this as it changes? In the US, the was more of a cookie cutter approach. If you want to be a P2P player, you must go get registered with the SEC, and you're going to be like a securities player in this space. And so I think that model might show over time constraint in the development of new technology businesses. So I'm a believer that in the case of technology, in the case where China has an opportunity to leapfrog in the use of technology, where China can be a leader in internet finance around the world, that it can learn from the UK and saying, okay, we've been going at this now for 3 or 4 years. Clearly risks have developed in the system. Clearly there's been a lot of fraud that's come out of here. How do we go to the industry? How do we go to the players which are remaining, which are stronger, which do have a purpose to do good, and make sure that they can self-regulate and work with the regulators to come up with a framework that is sustainable over time?
You've painted a very rosy picture about the UK as a financial center, even in the new economy. But do you think the success story of the Leave campaign and the Brexit may not undermine the position of London being one of the major financial centers of Europe? Very quickly.
I mean, unfortunately, Brexit is really bad for the UK, there's no question, but it may be very good for Asia.
Thank you very much. I do appreciate it.
Thank you. Thank you. Thank you.